Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get into today's video on this Tuesday, August 26th, 2014. Right now, markets are floating up ever so gingerly. Just like yesterday, the markets had a good early morning push and then have given back a majority of the gains. And again, if you look at yesterday's price action, and one more time, you're talking about the intraday SPY chart here. Each candle is 10 minutes long. So again, yesterday we opened higher, pushed up for the first hour or two, then slowly faded, then went sideways. Today we pushed up for the first hour or two and then have slowly faded right back down. Notice how yesterday's fade took us to the lows of the gap up, and today, same thing, happens to be the 50 moving average as well. So it looks like this kind of theme is going on. You're seeing, to me, early morning buyers and then some distribution going on over the rest of the day, where you have larger players starting to move out of positions, perhaps even starting to inch into some short positions as well, and that seems to be giving the markets a little bit of a downdraft. Now, volume continues to be of the utmost lightness. I mean, I can't even express to you how light the volume is. Yesterday we saw about 55 million traded. Today we're probably on pace for about 50 million on the SPY. And again, if you look back at some of the downside we saw, if I were to zoom out, for instance, on this chart, and if we were to go back to these days here, look at the volume. I mean, just compare this action to how thin and light it is over here. On these particular days where we were selling off 100, 200 points on the Dow, you were seeing volume in the range of about 150 million on the SPY. So if you compare that to 50 million now, it really shows you lack of participation by investors. I mean, sure, there's definitely a little buying going on, overselling, because the markets are generally up, but it's so minute because it must be, again, this leads you to believe that it's the average investor kind of inching in the markets, using margin, using other things to get exposure as the markets continue to go up. That is a warning sign in the longer term. The question is, at what point does it top out? When do we have our next downdraft? My guess is, and I'm a staunch advocate of this, is that, for the most part, you're going to see the markets move up into the holiday and maybe even a day or two after the holiday, assuming nothing crazy happens over the holiday session. Holiday weekend, I should say. So right now, that's what we're seeing here, folks. And again, markets are floating back up after bouncing off the 50. You can see right here a little intraday action. This trend line that worked perfectly yesterday did get pierced today, and then we came right back under it. So it does seem that that's a pretty impressive trend line. Right now, the S&P is 2 points above the 2,000 level. If they were to hold the markets here, we would see a close above that key level. Yesterday, we pierced the 2,000 level on the S&P. Today, it looks to close above that level. Okay, so that's what we see going on there. We do have a couple key stocks moving. Obviously, Tim Hortons, after merging or announcing official merger news that they were merging with Burger King, that stock is up another 8%. Just a tremendous move. If we go to the daily chart of Tim Hortons, look at this move. I mean, first of all, obviously someone got some sort of word that there was chatter about it right here, and the investigators should really look into that. Then you got a beautiful bull flag pattern here, and again, we all know what bull flag patterns are. It's signaling that there's more upside to come. And then look at this. Here you got another little signal right here, and then the big gap up and the gap up. So tremendous. I mean, think about that. From where this was about 3 weeks ago, Tim Hortons is up right now about, you're talking about 75% or so. That's a tremendous move on that stock. Other stocks that we want to pay attention to, we are seeing Apple down about 35 cents today, and that's with the NASDAQ higher. So Apple obviously is slightly weaker than the overall market. And this doesn't tell me much because this is basically coming at the double top. So if I zoom out on the chart, you can see the double top right here, and you're just above that. So according to what I'm seeing, you could actually be just consolidating up here before you have one more move up. And I still kind of think that there might be that extra move coming up. Right, you have, again, still a couple more holiday days. Remember, tomorrow's Wednesday, then you have Thursday, then you have Friday. All should be very, very light trading days. Then when you get back from the holiday, very likely, if nothing happens over the holiday weekend, Tuesday and Wednesday of next week should be very light as well. So, that does give the potential for Apple to have one more float to the upside. And If it does that, my guess is it does hit 103 to 105 now. Originally, I thought 102 to 103 was going to be the top on Apple. I actually think that could be getting raised right now in terms of a short-term price target to the upside. Okay, one stock or ETF that's hitting a major double top today, you have to take note of the IBB. Again, with the biotech companies being bought out left and right by the bigger biotechs, this has been propelled back up. Remember this big collapse? I still remember it because we were short the IBB with the research center, but this thing came from 275 all the way down to 210, just an epic drop. Now it's all the way back to 275. I do think it probably will run into some resistance, probably between 275 and 277 if it hasn't already run into some now. So there might be a tiny bit more upside just because you have a couple float days, but there's no guarantees at this point. Essentially, you're at this level where you have to start to think logically that a lot of these stocks should run into some resistance. One thing that's catching my eye is the IYT. All right, and the IYT is interesting because it never so far has taken out this double top right here. So again, if we look at the chart here, you can see that that line has not been tagged, and it's kind of peculiar since the markets keep going higher that the transport ETF, this is the transports, they're not able to really break through that. Now, they might be able to do it in the next few days since it's going to remain light volume, but it is, again, something that I'm paying close attention to and monitoring as well. Amazon today, guys, having a nice day today, up $8.50. A little bit of a bullish pattern here. I talked to our members about that in the daily analysis video as well as the No Hype Live broadcast, and that's what you get as just part of the offerings here when you're a Research Center member here at InTheMoneyStocks.com. But again, please notice this. So it has a good move up, then bullish consolidation, and then pushing up today. My guess is this goes to the 200 moving average, then I'll reevaluate. There's always a chance it could go up to gap fill, which would be right here. All right, that would probably be your max upside, which would be gap fill from earnings. There is a chance that it doesn't get higher than the 200 MA right here as well. All right, so just a couple different stocks out there. ExxonMobil is having a pretty solid day today. Again, Exxon's been kind of consolidating here. As far as I'm concerned, it's a nice day on Exxon, but it doesn't change this big drop that it had, and this is all inside action. So even with today's update, it really doesn't change that because you haven't even taken out this high, and even if you did, I still think it's all inside action that has a good enough angle for a potential short down the road, even if it goes up to the 50 MA. So again, I'm not saying this is going to be a trade that I definitely want to take, but it's one that's on my watch list to reevaluate in the coming days to monitor it. Basically, over the next week, week and a half, I'll probably monitor it and see what it shows us. Okay? So that's something interesting there as well. A couple other things. Let's take a look at some commodities. The USO is up 9 cents. This has just been consolidating. Again, folks, big drop on the USO, but look at this consolidation. Right now, this would be the beginnings of bearish consolidation, which right now puts you in the position to think that down the road, maybe early next week, or maybe even as early as Thursday or Friday of this week, you could see another flush on oil. All right, so keep aware of that. Be aware of that. Your target still remains right down here, right around the 34 Pierce level on the USO. So, again, that's what we're seeing there. Corn is taking a hit today. Again, if you look at the commodity is actually down more percentage-wise than the ETF here. But the ETF, remember, takes into account multiple different contracts on corn into the future. So they obviously move a little differently. And that way it kind of gives you a varying risk level because it's going out multiple months on those contracts and then averaging the gains and the losses on them. But bottom line is, if you look at the chart here, this has been a very interesting trade for quite some time. You still have a little bit of a bottoming potential tail right here, but as we come down, we got to start monitoring that low. You don't want to see corn close below that low. All right, that would be, as long as you believe it or not, as long as you stay above that low here, then you're good to go, and you would generally assume there's some sort of bottom being formed here. But on the other side of the coin, if it does get below, then it could be in some trouble, and you could see some downside there as well. Okay? So just something we want to continue to monitor there. Other than that, let's take a look at gold. Gold early in the day was up pretty nicely. It has fallen back down, but still up 84 cents. But you can see the gap up today was pretty substantial. If we go to the intraday 10-minute chart, here you can see the fall it had. So really it opened up sharply and then came right in. Now it's starting to creep up just a little bit. But again, still considering the weakness it's seen lately, this is not exactly a robust rally on gold. And overall, I think that the processes that gold is making right now will lead to further downside. All right. Even if the market gets a little skittish, you might have a small update here and there, but I don't think you're going to get the big move. The bigger move on gold is going to be reserved for when we really see inflation. Fear I don't foresee gold being a huge benefit of that. Sure, it'll go up a little bit when we get some selling in this market, but for the most part, it's the inflation trade or the the future inflation trade that's going to be the trigger for gold to really catapult. And I think that, believe it or not, because of an economy that hasn't really, I mean, yeah, we've gotten some jobs back, but they're low paying jobs. It's not the high paying stuff. I mean, if you look at what we've gotten back, the economy has recovered to some extent, but not overly. Not to the point where it justifies $3, $4 trillion in printed money by the Federal Reserve. So, in any case, I think down the line there will be massive inflation. That's when you want to be in gold. I still think gold overall, if you ask me where this thing is going to go in the next 6 months to a year, I have to say lower. I do think lower that it's ultimately going to go. All right, so just a little side note there. Silver today is trading up flat to positive. Had a good gap up, but just can't hold it. I've been bearish on silver for a long time. I continue to be bearish on silver. I mean, this thing, again, that's just such a weak showing when it's that oversold and it bounces up and gaps up and then it can't even hold that and it comes right back in. So again, you should continue to expect further downside on that ETF. U.S. Steel continues to be a powerhouse here, just off the highs of the day, up 60 cents. It's a beautiful move. You got to sit and respect this. I've been a staunch advocate of not shorting U.S. Steel. It is coming closer to a key level, and that I will pull the trigger on. But again, there's a lot of people that have shorted along this path and have been wrong. And you got to know where to look for the charts and be patient. You know, especially in a stock like U.S. Steel that has so many shorts. And this is very important, guys. I mean, if you look at the longer term, first of all, you had this huge choppy bullish consolidation. That was a huge breakout. And again, you can see really right here. And once it got above here, it was getting ready to blast up. But the point is that this is one of the most highly shorted stocks. They finally had some really good news. That was going to create a multi-period short squeeze. And again, it's lasted in a generally positive market. Finally getting closer to resistance. But again, you know, it still has a little more upside to go. I'm not ready to pull the trigger yet. It's just getting close. And, of course, I'll release that live in the Research Center when I do so. So bottom line is, guys, come join us here at the In the Money Stocks Research Center. The Research Center, there's a 7-day free trial for it, so come join us there and profit for life. I mean, bottom line is, that's what we like to do, is if you learn the methods, I'm a true believer that the profits will follow, and you can just keep doing the methods over and over again to find the success that you dream about finding. Talk to you later, guys.